Hi guys, welcome to another honeystocks.com weekend analysis for the 1st of February 2019. Now, the market this week has obviously had a huge earnings week. I think most of us probably expected, and one way or another, we probably expected to see a little bit of volatility. We probably expected to see, rises, declines. I think as the week has progressed this week, there are many areas of the market that we need to be absolutely aware of at the moment, and hopefully today's analysis, all the charts that I'm going to be walking through, will hopefully help you out in some way. Now, I think most of you probably understand that I'm no longer in Asia at the moment. I think with the coronavirus, I got out absolutely perfect timing. I couldn't be happier about that. I do have friends that are obviously in Hong Kong, etc., and it's obviously quite difficult at the moment, especially with the day-to-day environment that's obviously on over there. It's very sad actually, but yeah, I'm back in Scotland at the moment. I will probably, I think my next move, because I don't like the Scottish winter. I think most of you probably know that already. Last year I spent winter in Mexico. This year I've obviously spent a bit of time in Asia. I do prefer the warmer weather. So I think perhaps in the next few weeks I may go over to a part of the world that is just a little less unstable with regards to the virus. I think maybe Mexico might be another shout again. I'm not 100% sure. But yeah, let's dive into the charts. Let's see what the market is telling us, and let's see what we can do this week. As always, guys, please pause the video. Just make sure you're comfortable with that before watching any further. Basically, just saying that I'm not an investment advisor. There's not any investment advice here. All the information is my opinion only, and however you wish to act upon any information is entirely on you guys. Now, if you don't know who I am, I'm registered with the CMT Association. I'm working my way towards my chartered status at the moment. Technical analysis, like I said, is what I'm widely known for. So hopefully you get a bit of insight to this, because I do understand, especially over the last 7 days, quite a few of you have been maybe struggling a little bit. Some of you have done really well on maybe some of the earnings plays, etc. But by and large, the goal of this weekly analysis video is just to stop you from doing that. Now, we do have another big week coming up with the earnings. I think just to touch on a few of the big ones that I think will potentially move the market a little bit. I think Google is the obvious one there on Monday. I think Disney is obviously a big one. We've obviously got Energy, ConocoPhillips, Sony, which is doing really, really well at the moment. We've got Twilio, QCom as well, which I'm going to be going over that chart today. Bristol Myers Squibb, it's been on a great run recently as well. So there's a lot to keep us interested this week with the earnings. But I think the key thing for those of you that follow me close enough, I think most of you understand that I've got a very rules-based approach to the market. So I would just urge you, if you're somebody that likes to buy in on stocks in the minutes leading up to earnings and you're gambling, I would just urge you to maybe start to rethink things a little bit and maybe look to take advantage of any declines on an earnings rather than going in before earnings. I think AbbVie is another big one on Friday as well. But hopefully you get some insight from the charts. Please, bottom right hand corner, feel free to subscribe to our channel. We do try to upload every week. Lots of insight, and hopefully you get some value from this one. And if you do want to stick around, if you are somebody that is struggling out there, maybe you don't understand technical analysis as well as you would like, maybe you're a fundamental person and you want to maybe pick up a logical technical approach to maybe help you with your fundamentals, we've got a really good offer going on at the moment that I'll walk you through at the end. But yeah, let's dive into the charts and let's really just see what they're telling us at the moment. So I think if you watched last week, I think most of you will have understood what I was saying about the market meeting technical resistance and where we may see the money flow over the course of the week into defensive areas. Now, utilities had another good week. We've got financials moving into an improving area of the rotation graph. Energy, which has just been beaten to death. Biotech is not performing well at the moment. But what we do have, we've obviously got utilities, we've got things like gold, etc., that are starting to move, and those are defensive plays in the market. So that really tells me that we need to get a little bit cautious with equities, with stocks, and a couple of the charts that I'm going to walk you through will hopefully make a bit of sense to you. Now, this is the S&P 500. This has been my chart for weeks and weeks now. Basically just saying that if the market is going to meet a little bit of resistance, then this is the level that we can probably expect it to happen. Nobody has been more bullish than I over the last few months. I think once we got this breakout, aggressively long in the market since the beginning of November. The market has been incredible for the last 3 months for all of our subscribers and clients, and I think now is time to just get a little bit defensive in the market. Now, I'm going to just touch on this chart here for XLK. Now, this is the technology sector. Now, again, very, very similar to the S&P 500. The tech area is obviously one of the leading areas of the market, but what we can obviously see here, again, very, very similar. We're just meeting technical resistance. We've had a hell of a run. It stands to reason that we give a little bit back to the market at this moment in time. Now, doesn't mean that I'm bearish on the market. It doesn't mean that I think we're going to go into a massive correction or anything like that. I think what the message I really want to convey here is that we're in a long-term structural uptrend. The uptrend is intact, but when we have these big moves in the market to the upside, we can naturally expect a little bit of a pullback. Now, that corrective phase could be absolutely anything. We could drop 10%, we could drop 15%, we could also drop 5%. The default answer for any good technical analyst is that nobody knows. Anybody that says that they know for absolute certain what's going to happen, I would take their charts with a pinch of salt. All we can do is react to price, manage risk, and that's the way that we do it. Certainly how I do it at honeystocks.com. So I think until we break above this level, I think it makes a lot of sense to get a little bit defensive with some of the bigger tech names. Now, the other side of the coin is that just because the market meets technical resistance, maybe just because tech meets technical resistance, it doesn't mean that your individual tech stock or your S&P 500 stock is going to decline. That's a common misconception. It just means that you have to just manage the position a little bit closer, and if we do get the declines, you're going to be able to buy back in at some point. But I do take the view that it's easier to take new positions in the market than it is to replace lost capital. So that's why I would say at the moment that getting a little bit defensive with equities, it makes a lot of sense to me at the moment. Now, before I get into the individual stocks and the charts for the stocks, I just kind of want to point out to you guys just why I don't watch the news. Okay, now, obviously, coronavirus is the word of the day at the moment. It's what you're seeing on CNBC, on Bloomberg, etc. But you have to understand that it's not rocket science to assume that these large corporations obviously have a vested interest in the direction of the stock market. I've got a really well-known popular blog on this subject. Now, when we understand that we've met technical resistance in the market, when we understand, that obviously there's global areas of concern, China, etc., all we have to just keep an eye on is the support and resistance in the market. It's not any coincidence that we started to see headlines on coronavirus when the Hang Seng was meeting resistance. That's where the coronavirus fears and what we see in the media started. That's when it started, right at technical resistance. Now I'm just going to go out there and I'm going to say that we're probably likely to see positive headlines on the coronavirus around here. Now, we may not. I'm just wanting to put this chart out there because this is generally what happens. What I would also say is if you're out there and you're holding a lot of position size with Asia, I think this is the level. I think you need to watch the Hang Seng, and I think this is a level of great interest. I think if we break below these levels, around let's say if you get under the 25,000 there, I think that's a concern. So yeah, hopefully that makes a little bit of sense to you and maybe shows you why I don't watch news. Price tells me everything that I need to know. Now, individual stocks. Now I've got about 20 charts here, and what I'm really just doing here is walking you through the most requested charts of the week. I do tend to get the same charts requested over and over. So if you do want charts maybe for next week or the week after, you can comment in the YouTube comments, and I'll try and accommodate them as best I can. But I think with Facebook, I did highlight this one last week about a potential failed move with Facebook. Now, by all accounts, I think the earnings report was pretty decent. So I think $200, I think that this is a level that we need to be keeping a very close eye on. I think if you get a bounce, it's probably representing a buy opportunity. However, if the overall market declines and we drop below this, maybe those of you that like to take options, puts, that might be an interesting chart for you. Again, I'm not saying that we're moving into a bearish phase in the market. I'm just saying that we need to keep a close eye on key support and resistance levels. To the other side of the coin, we've obviously got Netflix. Huge sideways range at the moment. Until we break out of this triangle pattern, I would not be interested in this stock whatsoever, because if we continue in this phase, that's a 12-month sideways chop, and that's not something that you want to be in, because your capital's really doing nothing for you. I think with any good trend following approach, what you're simply looking to do is move into stocks that are obviously going to pay you. As soon as they stop paying you, you reallocate risk to something else that will pay you. Netflix isn't paying at the moment, and if you're out there and you're in Netflix, if you get another key rejection at this level, I personally don't see the point in holding, but naturally I'll let you guys come to your own conclusions. Hell of a week for Amazon. If you didn't catch it, one of my options guys had a huge week. Obviously, bit of a lotto play on earnings, not something that I would normally advocate, but jumping in, and I think he ended up making 40 times his initial outlay in an overnight position, taking a bit of a risk calculated gamble on earnings, and it paid off handsomely. But this is a level of interest. Obviously, we are pushing up right against technical resistance. I think if you get a rejection of this level, guys, again, to echo the thoughts of what I was saying about Netflix a second ago, I don't think it makes a lot of sense to continue to hold Amazon if you get a rejection at this level. I think a breakout, absolutely. Continue to hold. It will probably trigger some buy positions, new money to come in. But I think for me, this is a level that I think you want to watch with a lot of interest, and that's just incredibly logical to me. Starbucks, I think obviously Starbucks had a decent earnings, not blow away earnings by any stretch of the imagination. We've had a bit of a decline. This is a stock that I profited on well very, very recently. There's been a couple of trade alerts that have been sent out to our subscribers over the last few months on this, and it's done very, very well. But this is the level that I'm going to be watching. I think if we get any pullback to this level around 81.50, 82, if we get the required bounce, then that's for me an area that I might consider buying back into Starbucks. Obviously, all bets are off if we break below this level. We always need to keep an eye on the danger zones and the levels that will cause us a little bit of mental anguish and a little bit of distress. So I think that's a level for me that I'm going to be keeping a close eye on. I'm asked a lot about Lyft now. Obviously, with new IPOs, there's not a real structure to price, so it's very, very difficult. But I do feel like Lyft is now starting to show us a little bit of structure. Now, we're obviously in a bit of a sideways chop at the moment. It's not something I'd be looking to buy on a technical level at this moment in time. I think for me though, we are very, very close. I think we're only 8 or 9% away. I think if we get a breakout above this level and a move above the 200 period simple moving average, then I think Lyft might become appealing. So that's one that I think you might want to add to your watch list. Maybe set a price alert for $50 and see where price is once you get there. Now, Beyond Meat, again, this was absolutely huge a couple of weeks ago for our subscribers. Huge 35% move in a few days. Obviously, profit taking at this level completely valid. But you know, I think with all good stocks, or all good momentum stocks, I should say, we're always looking for that new entry. And I think if we get a further pullback to around the $100 level, I'll be watching that level with a lot of interest for a potential bounce. And if we get that, then it's probably one of those that, given the momentum behind it, that it's likely to start to move pretty rapidly. So BYND, I would suggest, is a stock that you want to add to your watch list as well. Canopy Growth, I think I'm asked about the weed stocks a lot because a few weeks ago I did comment and say that, you know, certainly with the marijuana industry, there's a indication that we've potentially found the bottom. We are still hovering around there. I'm not, you know, saying that the weed stocks are not going to advance, but there are individual stocks that are starting to show signs of breakdown. So if you're out there and you're in CGC, I think this is a level that you want to watch very, very closely. I think if we get a break below that level, I think that might induce a bit of selling, which may well offer opportunity, you know, further down the line. But yeah, I think technically, I think this trend line seems to make a lot of sense to me. And for those of you that are maybe looking to maybe buy into this again, I think this $30 level, which I understand is a fair distance away, I think that for me is a level that I would be looking to watch. Thanks to everybody that messaged after last week's analysis. I know a lot of you have jumped into Square and are doing very, very well on it at the moment. Long may it continue. We have our thesis at honeystocks.com. We're hoping that it goes to 82. I think most of you have got in here around 70. It's obviously performing pretty well at the moment. But I think given the precarious nature of the overall market, I think it makes a lot of sense to just manage risk a bit closer. You know, just ensure that you don't take any losses on the position. Just manage the trade to profit. You know, there's a potential here that we're forming a bit of a bullish flag pattern. So I'll be watching that with a lot of interest. I think if it is a bullish flag pattern, you'll probably see this close the gap to 82 pretty quickly. But again, I think it's going to come down to overall market conditions and what happens next here with Square. CDNS is a few bucks away from entry. I think this level here around $76, $77. I think if you set a price alert for that level, it's 8 or 9% away. So absolutely, you know, keep an eye on that one. To the other side of that, if you're out there and holding CDNS, I think this is a level that you probably want to pay attention to also. ZS. Now, ZS I was asked about this week, and I actually replied privately to the guy that was asking, but I think the chart again makes a lot of sense. I think what's simply happened here is we've had a bit of a gap fill here. And let me just add this in just to show you. So when we have, you know, gaps in price, there is a bit of a tendency sometimes for the gap to get filled and either rejection or we get the support. I think maybe what's happened here with ZS is we've filled the gap and we've got an immediate rejection. I think if you're out there and you're holding ZS, I think this is a level that you want to pay close attention to, especially if you're somebody that's maybe holding options, for example. But again, always understand where the absolute point of no return is, and I think for me this is a level that you want to keep a very close eye on with ZS. American Express, decent earnings. I think we've had a breakout. Looks like we're having a bit of a retest at the moment with American Express. So this is a level that needs to hold, in my opinion, for it to continue to advance. We are making a series of higher lows, which is a characteristic of an uptrend, not a downtrend. So I think with AXP, I think, keeping a very close eye on this level. I think we might well just be seeing resistance turning into support. But if we get a breakdown below this level, I think, it doesn't make a lot of sense for me on a technical level. AYX, now, huge congrats to everybody. I think for those of you, again, that follow me, a couple of months ago, I presented the thesis and said we're looking at potentially an inverse head and shoulders pattern. I know that many of you got this move as it moved above the 200 MA, a huge 40% move. So massive congrats to you guys that obviously follow me. Target now met. I think that's the message. I think it doesn't make a lot of sense for me at the moment to continue to hold. I think if we get a breakout, absolutely buy back in above 150. I think what you'd be looking for now is a substantial pullback in price. If you do like the stock, maybe you can buy back in again. But I think once you understand that you can do no more at this moment in time, technically, it's a logical profit area. If it blasts through next week, by all means, continue to hold. But I think for me, target now met. Thanks very much, Mr. AYX. On to the next one. It's CME. We've obviously had a recent breakout. It's starting to move. A couple of levels of interest. I think this is potential resistance that we might be encountering here. But again, we're only a few bucks away. I think if we can get a move above 225, then that's an area that you might want to consider. When we have a bit of volatility in the market, CME is a stock that you might want to consider. So yeah, again, hopefully that chart makes a bit of sense. AMD, I think this is a level of interest for those of you that have been asking. We've obviously had earnings out the way. We've had a bit of a decline. And now we're just kind of, chopping around here at a logical area of support. So I think the message would be, I think if we're above this level, I think we can continue to be bullish. If we drop below this level, I think the next stop is 43. And obviously, as you can see, the Fibonacci levels there, I will be keeping a very, very close eye on those. Comcast, I think this is a level to keep an eye on here. I think we can continue to remain bullish above this level here. I think that this trend line, makes a lot of sense to me. But again, understand where the blind spots are. It's obviously a great company. I'm not saying that just because we move below this level that it's no longer a good company. That's not what I do. But I think absolutely, if you're aware of the technical levels and where we may start to see those declines in price, it can hopefully help you make better decisions in some way. eBay has broken support levels and looks like it's in a bit of distress at the moment. So if you're out there and you're holding eBay, naturally I do hope that the thing turns around and we get a quick advance to the upside. But I think for eBay, if you're out there, you're holding, I think this level is something that you do want to keep a very, very close eye on. It's not a chart that I find appealing for buy positions. So yeah, if you're out there and you're in eBay, to the girl that was asking this week, that's my chart for eBay. QCOM obviously report earnings this week. I think there's a little bit of a danger here. It looks like we're potentially breaking key support levels. So I think this is a level at the 200 MA, around $80 is a level that I'd want to see support. Again, not saying it's a bad company, guys. I'm just simply saying to you that this is a technical chart, and technicals, whether you love them or you hate them, for some reason they just work. Nobody can really explain why. It's obviously human psychology, market psychology at play, price behavior, but these patterns, they always repeat. So if you're out there and you're in QCOM, just be very, very careful there of what's happening. Viva Systems, I do want to present two potential what's the word I'm looking for, an alternative thesis. I think with Viva Systems, I think if we get a breakout above this level, above the 200 MA, which we can clearly see is acting as resistance, I think if you get a break above that, then there's a logical move to 175. To the other side of the coin, we can clearly see that this is a very key support level. Again, this is not rocket science, it's a Fibonacci level. Again, very good example of why technical analysis is so helpful. It does work. So I think if this level breaks, then that's going to be good night for Viva Systems. So if you're out there, maybe you're looking at it, maybe you're holding it, just be careful on this level. And obviously if you want to buy in new money, then I think that's a level that you want to keep an eye on. Team, this is a stock looking for a breakout above 151. Chart's not too difficult on this one, guys. Simple breakout. I think 151, 152 is a level that you should keep an eye on. Now, MGM, somebody was asking about this week. Now, one of the things that I look for when I'm looking at a trend and a structural uptrend is I'm not wanting to see stocks that reach oversold conditions. As soon as you hit oversold conditions, that's a characteristic of a stock that's not really trending. It's not likely to move up, but it's representative of a stock that's chopping sideways. There's a lot of you guys out there that will be trading technicals. You'll be trading RSI specifically, and what you'll be doing is you'll be buying stocks that move into oversold conditions and hoping that they rise. But what I would urge you to do is maybe just to rethink that a little bit and look for stocks that don't reach oversold conditions, because those actually represent, in my view, a better use of risk. And as we can see, when we get these sort of bounces from key RSI levels, they offer opportunity. But when you reach oversold conditions, what you tend to get is you actually get shallow bounces followed by declines back into oversold conditions. So you actually find, and this is obviously just from my own observations, it's not advice or anything, but you tend to find that when we don't reach oversold, that we get these bigger spikes and the trend pays for a bit longer. So that's the reason why I wanted to highlight MGM this week. We've looked like we've got another bounce there, and it kind of ties in with the 200 MA a little bit. So MGM, if you're out there, that might be one for you guys that like the RSI plays. So yeah, guys, I think that's the message of the week, and hopefully you've got some insight from this week's charting. Now, for those of you that are maybe out there and maybe you're struggling a little bit, maybe you've been considering joining our annual subscription over the last few months, we're still running our offer at the moment. It ends on Sunday, so yeah, this has been a month-long promotion basically, and if you want to have full access to our trading ideas, which I'll show you what that looks like in a second, if you want to have access to our premium weekend charting, for those of you that don't know, I also have another premium weekend analysis that's provided to our members, which highlights usually 10 to 15 of the very best charts for the forthcoming week. You have access to a trading community for 12 months. If you're struggling with a chart, I'm on hand to provide ours. But I think why everybody's snapping up our offer at the moment is down to that. So all sign-ups at the moment are receiving full access to our technical analysis program. We charge a lot of money for it, and we're running this, as I said, we've been running it for the whole month of January, and the response has been absolutely massive. So if you're out there and you do want to learn technical analysis, maybe you just want to be aligned with a trading community, and maybe you want to just do a little bit less work with your charting, I'm sure we can probably help you in some way over the next 12 months. But if you don't know who I am, I'm Sam, as I presented at the start of this video. Working my way towards my chartered status. Technical analysis is what I'm known around the world for. I also have my website, honeystocks.com, super well known trading website, blog, analysis, whatever you want to pigeonhole me as. But I don't overcomplicate things, guys. I'm not a day trader either. That's something to just kind of point out. I have a hold time which is generally weeks, sometimes months if the stock is paying particularly well. And the charting that I have and what I provide has applications if you're buying stock, if you're buying options, however you choose to profit from the markets. We have many successful investors. We've got many successful traders. So it really just depends how you want to use our charting. But the charting always makes sense. Now, the other unique thing about what I do at honeystocks.com is I publish every single trade idea that I post to my clients and obviously our subscribers, and I've done that since day one. So feel free to go onto our website and check out the types of stocks that we're recommending. You can see the dates that I've posted the chart to the group. You can see the price that I've recommended it at, and you can go on and see how those stocks have then gone on to perform. So all information is available on the website. I have a code of ethics that I need to follow, and everything that's stated on the website with regards the trade ideas, there's nothing that's been omitted. Everything is complete fact, and nothing is misleading whatsoever, and that's down to my code of ethics that I need to follow with the CMT Association. So that's what a trade idea looks like. You can clearly see it's very specific. I'll post this chart to my group, which I have my own app. Everything's housed. It's very professional setup. You're not joining WhatsApp groups or anything like that. I've got a very professional setup. There's a chart for Starbucks. Again, very clear instructions. And that's actually what we do. We also provide bespoke charting. Arrowhead Pharmaceuticals was one that was absolutely massive a couple of months ago for one of our subscribers. We've also got ENPH, which this is just hit our target at 34.50. So yeah, that's actually what we do at honeystocks.com, guys. It's very supportive, great community, just incredible people, incredible traders. But it's not for everyone. I think if you are somebody that wants to get better at day trading, don't bother signing up. I don't think we can help. I think if you want to move away from day trading, I think if you are maybe trying to fit trading around a career or a business, maybe you just want better consistency, and maybe you're just tired of following others. The access to our technical analysis program has been massive for absolutely everybody. So I would highly encourage you to just jump onto our website and maybe check things out a little bit, because I understand what it's like to kind of hunt around YouTube, learning from those losses. It's absolutely soul crushing. So if you're out there and you're struggling a little bit, it doesn't need to be complex. It doesn't need to be difficult. I think once you're shown a structured way of trading, then things will change. So hopefully that's something that we can help you with. So if you're interested in our new way, guys, there's a link below. You can register your details. For $500 a year. It's yeah, I think the value probably speaks for itself at this point, and I think it's probably why there's been so many people signed up over the last couple of months. So yeah, please enjoy the rest of your weekend, guys, and thank you from the bottom of my heart for watching, and maybe we'll see you in the next video or in our group. Thanks.